Meet John. No, not your ordinary John who might binge watch sitcoms or collect fancy socks. This John is a wizard of Wall Street, a maestro of the market, and a stock-savvy savant. Now, we all know how crucial it is to figure out what stocks to invest in and which ones to hold onto tighter than your grandma's secret cookie recipe. With the market being a wild roller coaster ride, having the right stock picks is like having a VIP pass to the best seats of the house. With his crystal clear insights and a knack for spotting winners, John is here to share his top 6 stock picks that are hotter than a summer sidewalk. Ready to dive into the world of stocks with John and uncover which companies are worth holding on to for the next 6 months? Let's get started. Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. John's top picks include a tech titan that's revolutionizing the way we connect, a healthcare hero making waves in medical advancements, a green giant leading the charge in sustainable energy, a retail rockstar with unbeatable e-commerce growth, a financial powerhouse redefining digital banking, and an entertainment emperor keeping us all entertained and engaged. Are you excited to know about these companies? Buckle up for a ride through the world of stocks with a company that's as reliable as your favorite pair of slippers. Let's talk about Carium, the Swedish superhero of elderly healthcare. Imagine a company that's the ultimate guardian angel for your grandparents, offering top-notch care with a tech-savvy twist. Carium provides hardware devices connected to response centers, like a lifeline for seniors. Ensuring help is always just a button press away. Operating in Sweden, Norway, and the UK, they are the market leader with 60% of sales, always in demand, rain or shine. When it comes to Carium's financials, they're acing it with high single-digit growth and a 30% return on invested capital. On the business quality scale, they score a solid 4 out of 5, maintaining a steady customer base and profits. Their EV to EBITDA is 13.37, and their PE ratio is 16.8, showing they're fairly valued. Adjusted for amortization, their EV to EBITDA drops to 10.9 and PE ratio to 12.5. With impressive market leadership and financial expectations, Carium is like that dependable friend who's always there for you. For a stock with reliability and growth potential, keep Carium on your radar. Next, let's dive into Zumiez, the American retailer that's all about skate fashion and cool vibes. Imagine a store that's a haven for skateboard enthusiasts and anyone who loves that edgy, laid-back style. Zumiez isn't just selling clothes. They're selling a lifestyle. With 597 stores in the US, 47 in Canada, 87 in Europe, and 25 in Australia, they've got a global footprint. Plus, their private label products, making up 20% of sales, add a unique touch. In terms of growth potential, Zumiez faces challenges in the US, but sees opportunities in Europe and Australia. Financially solid with no debt and significant cash reserves, their EV to EBITDA is 6.6, with potential to revert to a historical EV to EBITDA of 10, suggesting room for value appreciation. Zumiez is like that reliable skate buddy who knows all the best tricks, but must navigate new challenges. With a strong financial position and untapped market potential, they're a stock worth holding in the retail sector. Now, let's jet off to Poland and check out Witchen, the stylish company that's all about suitcases, bags, clothing, and accessories. Imagine stepping into a store filled with chic, high-quality products that scream sophistication. Witchen is a family-owned gem, with the Witchen family steering the ship and ensuring everything stays top-notch. Most of their sales happen right at home in Poland, split between their elegant stores and bustling online channels. Witchen's growth story is bright, with low double-digit growth expected from 2024 onwards. They've got a return on invested capital of around 30%, indicating they're making good use of their resources and delivering solid returns. Despite operating in a highly competitive market with big names like Samsonite and Gucci, Witchen holds its own, earning a business quality rating of 3.5 out of 5. Financially, Vichen is sitting pretty with a price-to-earnings ratio of 10 and EV to EBITDA of 8.5, suggesting potential for solid returns in the fashion and accessories market. In essence, Vichen is like that classy, reliable friend who always shows up looking sharp, holding their ground in a competitive world and promising steady growth for the future. Next up, we have Camex, the Finnish retail company that's all about giving used cars a second chance. Imagine a bustling lot filled with cars of all shapes, sizes, and colors, each one ready for a new adventure. Camex's business model is simple yet effective. They acquire cars from various sources, give them a little TLC with minor maintenance, and then put them back on the market. They operate in Finland, Sweden, and Germany, with Finland being their stronghold, enjoying a commanding 10% market share. However, it's not all smooth driving for Camex. The company faces stiff competition and has struggled to turn a profit in Sweden and Germany. But there's a silver lining. A new CEO is behind the wheel, focusing on steering the company toward greater profitability. Financial expectations for Camex include mid-single-digit growth and a solid return on invested capital of around 20%, indicating they're making good use of their investments. In terms of valuation, Camex looks quite attractive, with an EV to EBITDA of 8 and a PE ratio of 8.5, suggesting potential value for investors who believe in the company's ability to navigate its competitive landscape and drive growth. So, if you're looking for an investment that combines the thrill of a good bargain with the promise of steady returns, Camex might just be your ride. Let's toast to Alvi, the mastermind behind some of Finland's finest beers, spreading their frothy goodness across the Baltics and Belarus. Their business sails steady, like a ship in calm seas, which is reassuring in the turbulent world of investments. Alvi has brewed up some impressive numbers, with a historical growth rate of 4.5% per year from 2018 to 2023, and they're eyeing a solid 6% annually ahead. Yet, it's not all smooth sailing. Political ripples in Belarus add a twist. But for those craving a calculated risk, Alvi's EV to EBITDA of 8.9 and PE ratio of 11.5 offers a tantalizing opportunity. So, if you're up for a blend of stable performance and a splash of excitement, Alvi might just add a refreshing twist to your investment mix. Meet On the Beach Group, the online wizard of beach holidays in the UK, making your dream vacation just a few clicks away. They sell vacation bundles without heavy investments, boasting an infinite ROIC. Sounds like magic, right? This company has serious growth potential. They're aiming for £200 million in sales by fiscal year 2024, and they have already been cruising with a 10% compound annual growth rate since 2019. However, the ride isn't all smooth sailing. The business is as cyclical as the tides, given the seasonal nature of beach holidays. Plus, they're up against industry titans like Booking.com, making the competitive waters a bit choppy. Despite these challenges, their financials are pretty solid, with an EV to EBITDA of 9.7 and a PE ratio of 9.1. On the Beach Group presents a tantalizing opportunity. Their business quality might be rated 2 out of 5. But for the adventurous investor looking for a splash of potential amidst the sun and sand, this could be a sunny addition to your portfolio. And there you have it, folks. These are truly must-haves. But remember, while these companies present exciting opportunities, it's essential to do your due diligence and consider the risks involved. The information presented today does not constitute financial advice. Make sure your investment decisions are based on your own research and analysis, as well as your financial capacity. Thank you so much for watching. What about you? Which stock will you invest and hold in? Share your thoughts in the comments below. If you enjoyed our content, show us some love by liking, sharing, and subscribing. Stay tuned for more.